Good afternoon, everyone. This is CA Pooja Rathi, and I welcome you all to the today's webinar. As we all are aware, the IMS has been brought in place from October 24 and ISD shall be implemented April 25 onwards. So we feel it's the correct time where we discuss the nitty-gritty of the IMS as well as ISD mechanism. The discussion shall be led by partner CA Ravi Kumar Somani sir, who leads the Pune branch, along with CA Nandini Gupta, who is a partner designate and have been practicing IDT for more than 10 years now. Just one request to all the participants, the questions or the queries you have during the session, please drop it into a question and answer box. The speaker shall address all the queries at the end of the discussion. Over to you, Ravi sir.
Yes. Thank you, Pooja, for the introduction. So, Pooja, there are many participants who are joining now, so you can, add them into the group as and when, they are part of the waiting lobby.
Sure, sir.
Okay, welcome everyone. I think this particular discussion is long due and much needed because in GST, of late, there are so many changes right from 53rd GST Council, 54th and 55th GST Council. Numerous changes have been made both in the sector specific changes as well as on the procedural and the compliances side. What is being seen is that the compliances in indirect taxes, as we are seeing the way it is going and what we are listening, is that the compliances are only going to increase significantly from here onwards. So I would say, all the good part of GST is behind us, and a lot of complexities and complications are actually ahead of us in indirect taxes. So the reason for having this session or discussion is that many clients, when we were meeting them, had a lot of questions relating to IMS and ISD. So we thought, let us have a session for the benefit of all our clients so that we can explain them in detail, and in a single get together, we can resolve many of the queries. So my suggestion or request to all of you would be to see that let us make this more of a discussion, more of a Q&A type of arrangement rather than a webinar. In case you have any questions, just add it in the Q&A box or just raise your hand. We will unmute you, and we can discuss all your queries. Don't wait for queries to be parked in the end. So as and when any queries come in, just raise your hand or just write it in Q&A. We'll try to answer it then and there itself. And whatever whatever doubts or something that you have, let us say if some query is not resolved, because in IMS and ISD there are certain aspects which are still open where there is clarity to emerge. So we will take a note of those queries and we will be addressing that separately. So Pooja and Raj, if there are certain queries which are not resolved, just make sure that the same is noted, and separately we can communicate that. What we are also doing is we will be sharing, probably in the next week, we'll be sharing one advisory to all of you, which you need to be sharing with your customers and your suppliers, more specifically from the point of IMS, because as we will discuss now, in IMS, the penal issues or the risk of non-compliance is significantly high. So let us keep this as more of a dialogue rather than a webinar. Now, the flow that we'll be following today is first we'll be taking up IMS and then we'll be discussing ISD. So Nandini would be taking IMS, and I would be posing some questions on Nandini so that the entire flow becomes more like a Q&A rather than a one-way dialogue. That's the whole idea. And again, I'm repeating for those who joined late, you have any questions, any doubts, just raise your hands or just put it in the chat box or Q&A box. We would like to immediately answer that rather than keeping that to the last, so that there is a flow in the discussion and we are discussing on the issues. Something which we are not able to resolve, we will park that question and separately reply that to you, that particular relevant question. So just a quick head start on IMS. IMS is called as Invoice Management System. Government is introducing IMS because they have this ambitious project. Right from July 2017, they wanted complete control of your books. But unfortunately, in the original GST law, what they proposed of two-way matching, they could not introduce two-way matching because of various ground level challenges. But government has this ambition to have a complete control over the taxpayers records, and in with the introduction of IMS, I would say in a half-baked manner, they are introducing one-way matching sort of concept. IMS is in a way, one-way matching sort of concept where the recipient or the customer decides the legibility or the, I would say, authenticity of the transaction. That is how they have introduced this entire thing. In fact, a couple of years back, they brought this permanent reversal and temporary reversal concept in the returns with an intent of this only. They wanted to know that only the credits that is there as per 2B, only those goes into the books of accounts, and the assessee's books are of no relevance. But that temporary reversal and permanent reversal entire mechanism which was there in the returns was not properly followed, or I would say the purpose of that did not meet. And that is why they brought IMS. I am of the opinion that once the IMS is fully in place, the temporary reversal, permanent reversal, all those things may be removed because that relevance of the thing doesn't really is required. Now, there is a lot of confusion in the industry, trade, and professionals that IMS is mandatory from 1st of April 2024. Let me tell you, sorry, 1st of April 2025. Let me tell you, IMS legally cannot be mandatory from 1st of April 2025 because the legal provisions in the law relating to IMS are still not in place. Most likely in the budget on this Saturday, the legal provisions will be introduced relating to IMS. Once the provisions are brought in the budget, it will take at least 6 to 8 months time for it to get implemented because all the states would have to pass in the legislative assemblies. So I am of the view that IMS should eventually get mandated maybe 1st October or 1st January 2026 or 1st October 2025. But let us see. Having said that, am I trying to communicate that IMS is not mandatory, hence don't implement it or don't do it? Answer is no, because whatever we have seen, the way government is doing nowadays is they first change the portal and bring the portal in place and then amend the law later. Same thing happened with GSTR 2A, GSTR 2B, and now with IMS, and of course with e-way bill and e-invoicing as well. And another very interesting thing in IMS is that whether you like it or not, or you want to implement it or not, if your customer of your supplier implements it, you are forced to be part of the implementation, this thing. So having said that, what I'm trying to say is eventually we would have to start adopting, implementing IMS immediate basis. While legally, if something goes wrong, it can be challenged because law is still not in place. But unfortunately, nobody, none of us want to litigate and challenge. We would want to rather comply and make sure that there is no litigation. Hence, today's session, we will discuss on how to, first of all, what is IMS and how to really how to really comply with this IMS practically, what is to be done. We will try to keep this session as much as practical oriented as possible. We do not want to get into too much of legal provisions and jargons and all those things. Practically IMS, अगर मेरी ऑफिस में मेरे बिजनेस में IMS मुझे कंप्लाई करना है तो प्रैक्टिकली मुझे क्या करना है, मेरा मेरा मंथली रिटर्न्स फाइलिंग का प्रोसेस या साइकिल कैसे चेंज होता है और मुझे क्या एक्टिविटी एक्स्ट्रा करना है ताकि आई डोंट फेस एनी प्रॉब्लम बिकॉज ऑफ IMS. So this is the goal. So again, I am repeating, any questions, please shoot in the Q&A or just raise your hand. We will answer immediately and let us keep it more of a discussion oriented. So I will pass it on to Nandini to discuss on the basics and other aspects of IMS.
Yes. Thank you, sir. Good afternoon, everyone. So with the introduction, which is briefly provided by Ravi sir, one of the disclaimers which the GST portal in its advisory is given is IMS is not mandatory, and that is why it is not an extra compliance to the taxpayer. This is the disclaimer through which they have started the introduction of IMS. They want us to get into IMS. However, they've given a disclaimer stating that there would be representation, there would be indication that's an extra burden or extra compliance. So the entire background they started with discussing. As of now, it is not compulsory. First thing, what happens if there is IMS? Everybody knows there is IMS from October 24 onwards on the GST portal. Many of us have not taken any actions. Isn't that my IMS portal has any changes or no? The answer is yes, there is some IMS dashboard. At the back end, it is running, it is fully functional. However, the main purpose or the main line which is provided is if you don't take action, it is a deemed acceptance. That means in the back end, already for every assessee or every taxpayer, there is an up and running IMS system already available. Okay, so that is something which all of us should know, that already in GST portal for every GST number, there is something called as an IMS dashboard readily available, up and running from October. I think with this, we can start off the session. Definitely, the intention was to increase the transparency between the taxpayer, who is the supplier, between the recipient, who is the customer. However, in the course of which the department also wanted to have a clear, transparent view. So in audit, definitely there is a list of documentation which is asked. One of the main documentation which is asked is purchase register de do. Once IMS is implemented, what is purchase register? Entire invoice level or the transaction level which is there in IMS and which is accepted, or with all the things what we'll study in the course of today's discussion, is itself by itself a purchase register, and that is the only thing they will consider for the future scrutiny point.
So Nandini, I have a question for you here.
Yes, yes.
Do you mean to say that after IMS, my purchase register that I maintain in my SAP or in my Tally is not the relevant purchase register for the government? For the government, the purchase register is what is there accepted in my IMS and goes into B. For government, that is the purchase register. Is this statement correct?
The statement plus reverse charge is the correct statement.
Okay, so whatever is the invoice level information that has gone in IMS plus what I pay tax under reverse charge minus maybe if I do any reversal of input tax credit, let us say. So that is a purchase register as far as the government is concerned, which means my internal SAP purchase register is only for my matching or reconciliation purpose. But whatever credit I've taken, government will look at. So government will in a way have the purchase register in advance. Every month they will have my purchase register with them. Just like how today they have the sales register, they will have purchase register in advance with IMS. Perfect. Done.
Yes, sir.
Yeah, proceed.
Yes. Okay. So as of now, the URL path where you can see the IMS is also available to you in this portal. So as of now, it is not mandatory. As I told you, if no action is taken, then the entire IMS is accepted, and the same thing is auto-populated in GSTR 2B. So if at all there is a deferment of IMS from the department, what will happen? That's one important question, right? So as of now, whatever system is perceiving, it will pursue to the period in which it is made compulsory in the same extent manner. That means do not take any actions. All things in IMS is going to be auto defaulted to 2B. Then next question, whether that thing is a purchase register? No. As of now, whatever system we are following, once it comes to 2B, we again reconcile it with our books. Whatever is reconciled goes into 3B. So if at all IMS is not followed, purchase register is unique, independent and different. And if IMS is followed, that itself becomes the purchase register. Okay. Next legal question is, can there be a future retrospective query by the department? Say for example, April 25 onwards, the IMS is implemented. Let us take this example. Future department after 3 years, can it ask for anything which is IMS in between October to April, which is not at all taken actions for, or through which I have temporarily or permanently reversed something? Can it come back and ask me there is a default taxes which are delay in payment, or whether there is any default in taxes? Like how they did for 2B and 2A, in future they can again go back and retrospectively see, but definitely it can be legally challenged. Okay, there is one more link which is there in the PPT for you right now. It has all the IMS related FAQs which is released by the GSTN portal. So that is the advisory path which can be used for our internal reviewing.
So Nandini, if somebody wants to study independently about IMS, all these links, if they follow, they get everything what is there in the legal public domain, correct?
In the public domain from GST portal, yes. All
Perfect.
the advisories. Okay. Then is it something where IMS is a monthly duty? Is it IMS is a quarterly duty, bi-monthly duty, or a daily duty? That is an open question which has to be answered by every taxpayer independently. That is considering to the fact that IMS can be accepted, rejected, or no action taken. I'll come to every action of it, what it is, how it means, on a real-time basis. That means any e-invoicing raised by the vendor is there presently on two specific dashboards. One is GSTR 2B. One is GSTR 2A and second one is IMS. Both the places, any e-invoice which is raised by the supplier is available to customer at both the places. So once it is available, then they can continue to do the following actions. Now, what does IMS facilitate you? IMS will facilitate as a recipient. I can take the following actions. As a recipient of an ITC, first I can accept the invoice which the supplier is provided. I can reject stating that it is not related to me, or I can keep it pending. As of now, I have not received it, or as of now, the goods are not received. As of now, the services are not received. As of now, it is not appearing in my books of accounts. For various reasons, I can keep it pending. There are certain exceptions, we'll go back to it. And if I take no actions, that means it is a deemed acceptance. Whether it is a advantage to have this deemed acceptance or a negative advantage, we'll discuss upon that also. However,
so Nandini, I have one question here. Like, for example, currently also I have this GSTR 2B, correct? So I am taking currently also the credit which is matched. I will do the reconciliation with 2B, and whatever is matched only, I will take the credit. So then what is the difference between GSTR 2B, what I am doing right now, and IMS? Can you briefly explain on that?
Yeah. So in between 2B and 3B, or a little prior to that, there is something called as IMS. So in future, once there is an internal acceptance, all those accepted invoice only that will come in 2B. And once it is come in 2B, only then I get a right to claim the credit in my 3B. So as of now, the reconciliation which is performed is there available in somebody's desktop or integration or whatever there is no transparency. In future, the IMS is going to bring in a transparency where you're going to tell your supplier that yes, I accept your invoice. There is a credit note. There is what is uploaded by your supplier. Yes, I accept it, or I reject it, or I keep it pending. This transparency is going to increase from customer, supplier, as well as to the government. That is the broad change in future.
Okay. So basically what we are saying is that if there is a bill that has been uploaded by the supplier in GSTR1, and I can see currently I'm able to directly see that in GSTR2B, but in future it will not directly come in GSTR2B. It will first come in IMS. For IMS, I need to do the accept, and then it will come in GSTR2B. So this is a filter before GSTR2B.
Yes, yes.
Okay, all right, all right. I think Rahul has one question. So Pooja, can we quickly unmute Rahul?
Hi, Nandini. Actually,
Yes,
in
Yes,
that
Rahul.
case, right, Ravi said, I'm continuing in that the first filter is the IMS. So whether in that case, after completion of month or in somewhere between time of 8 days in a week, so it is routine exercise for us to go into the portal and whatever the invoices I have booking system. For those invoices, I have simply tick that is accepted, accepted, accepted. So this will be the additional exercise, or what will be the solution for that?
So there are two things, Rahul, in this thing. One is, as soon as the supplier uploads the invoice in GSTR1 and e-invoice is generated, you can immediately see that particular thing on a real-time basis in your IMS portal. So you can actually start taking action immediately on that particular invoice in your IMS portal, but that will not get communicated to the supplier. Only, I mean, that will also get communicated to the supplier. Only thing is that the ultimate thing would be only once the supplier files the GSTR1, then it will go and sit in your GSTR2B. Till then, you can take all the actions. So this is, I mean, there are two ways to do this action. Now there are so many softwares that have come, the matching related softwares. Through the software, you can, like currently how you are doing 2B related matching, there are businesses who do weekly 2B matching. So you can do the matching through the software, and software itself will, on a click of a button, it will bulk accept all your invoices, whatever is matched. Out a click of a button, it gets bulk accepted. Similarly, on a click of a button, it gets bulk rejected. So, but if you don't use software, even GST portal itself also allows bulk software, but that bulk, acceptance, bulk rejection. But the only thing is GST portal is not that user friendly. Beyond 500, you are not able to do the line items, and then you need to do one by one selecting and all those. In the last, we will quickly show you the GST portal also. So this is the additional exercise that they have brought.
Yes, yes. Currently, what happened, because in 2B data, it's on portal available on 14th. So after we reconcile 2B and 3B, but right now in IMS it is real time. So for based on the IMS it is to be generated, then I have to upload, you can say, weekly or daily basis, whatever the invoice I have booked. Based on that, I have to accept those the invoices on IMS portal. Then my 2B will be get matched with my books. Yes. Whatever the 2B is generated.
It will reflect in 2B only after 11th once the supplier has filed the GSTR1.
Yeah, but in
IMS you can see immediately.
It is real time. Once he has generated the invoice, then it is auto populated in IMS.
Yes, but it will reflect in 2B only after 11th. That is, after the supplier files the GSTR1.
GSTR1, correct. And
so only important aspect here is if at all e-invoicing is uploaded. Yes, Rahul.
Yeah.
No, what we can do, Rahul, lot of your questions. Now, just to stop, lot of your questions actually can get answered in the course of deliberation. So, fine. So we can cover that.
Yeah,
yes.
Okay.
Yeah.
Okay.
Anandini, proceed.
Yes. So one very critical aspect in IMS is it has though provided us 4 options, basically accept, reject, pending, and don't take any actions at all. But however, we cannot keep pending certain very important aspects, which is very important for the revenue to department. Okay, that is credit notes. If at all a supplier has issued a credit note as a recipient, I can either accept or reject. I cannot keep it pending. Similarly, if there is an upward credit note, that means a liability which is going to be more reduced from the supplier, that also I cannot keep pending. Or an invoice which is downward amended. That is also a credit note, similar to a credit note where the supplier is going to take a benefit from the government, sales reversal. So whenever there is a credit note or a downward invoice or an amendment which is downward, those are critical aspects which the department is clearly told in the IMS facility. You cannot keep it pending as a customer. Either you need to accept or reject. And one of the scenarios is if you do not accept or reject, it is a default acceptance. And what will happen if at all it's a default acceptance is that much of the ITC get reduced as a customer, and that is very critical over here.
Okay, so just to elaborate on what Nandini is saying, is that in a very nutshell or a very simple language, government wants money ASAP as soon as possible. They don't want to delay. So wherever the supplier is raising the bill, if I know this is my bill, I can accept. If I know this is not my bill, I can reject. If I don't want to take any action, I can keep it pending. I can keep it pending for 1 year also. Next year, October, when I'm filing my final reconsider, I can take action and close it. But as far as credit note is concerned, that is supplier's credit note or downward amendment of the debit note or the invoice, wherever government's liability is getting impacted, यानी government को जहां भी पैसा मिल रहा है, वहां पर government is saying you take immediate action. I cannot keep it pending. It means in that month itself, I need to either accept or reject. This is where the entire problem lies in the IMS compliance. For example, let us say मेरे supplier ने credit note डाला है and I don't know ये credit note मेरे books में it has not come till now. In the matching, it is not getting matched. I don't know what this credit note is. Still, I need to take action because if I don't take action, it will be deemed accepted. It is deemed accepted. My input tax credit gets reversed. तो what government is saying कि अगर supplier ने credit note डाला है और उसने अगर liability कम की है तो आपकी ITC हम immediate कम करेंगे. We will immediately reduce your ITC. So here in the budget, there was a lot of representation that was filed before the authorities. In this budget that is on Saturday, it is expected that they are going to allow 1 month for this. In my opinion, this 1 month is a useless thing. It is actually not proper. Why they should have all these 1 month, 2 months, all those things. But at least now in the budget, what is coming is you can wait for 1 month. You can keep the credit notes pending for 1 month. Within that 1 month, you should talk to your supplier and get that issue resolved. Either get an entry in the books of accounts or ask your supplier to, that you are going to reject the credit note. Inform your supplier that you're going to reject the credit note. So this is, very important aspect to be noted as far as IMS is concerned. I'll go into the details of it in the upcoming slides.
Yeah. So just wanted to show you how the viewing of an IMS dashboard is going to be there. Definitely there are two dashboards. One is for the ITC, which as a customer I'm going to claim. One is the dashboard as a customer.
So Nandini, can we do something like this? For the ease of understanding, let us first talk only from the customer's angle. First 15-20 minutes, whatever we are discussing, let us only discuss from the customer's angle. And then we will discuss from the supplier's angle so that, there is a clarity and we are able to relate because this is very complicated topic. That's why.
Yeah.
So
I'll have to link it on both the ways. So I'll take up this as a delta exercise first, then it will become much more easier.
Yeah, then we can link it, subsequently you can link that, correct?
Yeah.
So first, let us talk about, I am a supplier. I am going to issue invoices and credit notes to my customers. That is on my revenue as a supplier. What is the impact on me as far as IMS is concerned? So let us talk on sales side first.
Okay. The right hand side, whatever we see is a sales, and the left hand side, whatever we see is the input tax credit impact on the customer. Okay. Say there is an invoice which is issued by the supplier. As a supplier, the green highlight which is there, liability on record. Whatever I have issued invoice, that is a liability. I need to pay the taxes to the government. This is the first impact. The backward impact of it, as a recipient, if at all they accept the invoice, whatever is being issued, my liability is there, their credit is there, both the thing matches, and there is the transaction is looped fully. Okay, this is plain vanilla, assuming the best of the factors possible. We'll go to the next situation then. I raise an invoice. My customer, as a supplier, I am raising an invoice. As a customer, that invoice has been rejected. What is an impact on the supplier 3B liability? None. I have shown it as an output tax liability. Pay the taxes. However, in the outward dashboard of the GST portal, whatever is your customer rejected is going to appear. So do we need to review it? Definitely we need to review it, because the minute the customer is rejected an invoice, there is not going to be any payment which is received from the customer angle. So from that angle, I need to review. However, to the extent of GST portal, there is not going to be any liability or a change in the liability for the supplier. The third scenario, there is an invoice which is issued and I pay the full taxes. As a customer, the same thing is kept pending. And the minute it is kept pending, I again understand whatever is kept pending by the customer in the outward dashboard of IMS. However, do I have to take any actions on the GST returns? No actions. Similarly, can I discuss with the customers? Yes, definitely you can discuss with your customer to understand why is it kept pending, whether they received the goods, whether the services are not made properly, whether they have an intention to accept it, and by when. So this is the loop of an invoice on a plain vanilla basis.
Okay.
Sir, any questions?
So just to summarize, I am raising an invoice, customer has accepted, no problem. I am raising an invoice, customer has kept it pending. So I should immediately then call customer or get my other purchase customer team to talk to customer and see why they have kept pending. Is there a doubt they're not receiving invoice or whatever we should communicate. This also can help us getting our debtors cleared much faster, rather I would say. On the third thing is, I have raised invoice, but my customer has rejected it. Now that is the area where is a concern, right? So any invoice which I have raised and the customer has rejected, it means I need to immediately start the communication relating to that invoice. Then either I need to amend the invoice, correct? Or I must raise a credit note against that invoice, either of the actions, correct?
Yes.
So
yes.
As an office, we are recommending as much as possible go for amendment of the invoice instead of credit note, because if you raise credit note and unfortunately customer accepts a credit note, then you have a problem. So as far as possible in this IMS scenario, let us say if there is amount mismatch or GST number mismatch, place of supply mismatch, when you communicate any invoice which the customer has rejected, and you just talk to customer and just make an amendment in that invoice so that that issue get resolved, and the amended version would again go to the customer for acceptance, and he would accept that particular thing. Now only one scenario. Now if the customer rejects the invoice and you don't have any other choice but to raise a credit note, let us say amendment is not possible, then you need to raise the credit note against that particular invoice. Unfortunately, since the customer has rejected the original invoice, it means he has not taken the input tax credit. Now, if you raise the credit note, customer's input tax credit will get reduced. So you should call customer and tell, I am raising a credit note. You reject the credit note also. You reject the credit note also, so that I'll be able to raise a new invoice. In a nutshell, if the original invoice is rejected, it is better that the credit note also gets rejected so that the transaction gets nullified. If the original invoice is accepted, it is better that the credit note also gets accepted so that the transaction is nullified. Correct? So
yes. And the last scenario is, if at all the invoice was kept pending and you're also raising a credit note to nullify it, please tell your customer to accept credit note and invoice, credit note which is both in the same month.
Yeah. So if it is pending or rejected, that is where the communication starts.
Yes.
Perfect.
Yes. Okay. So next scenario is whenever there is an invoice which is or a B2B upward amendment. That means originally I gave a 100 rupee invoice. In future, I'm going to give 110. Say that 10 rupees is an incremental. Let us call it as a delta. Okay. As a supplier, let us understand what is the liability first. I hope my cursor is visible. Okay. This is the delta which we are talking about. So if there is an incremental, that liability of the supplier is definitely going to be for the delta, which is 10 rupees. Okay. As a recipient, if at all the original invoice was accepted, which was 100 rupees, and now the B2BA amendment also of 10 rupees is accepted, then the ITC is increased only for the delta, which is 10 rupees. So 100 originally, 10 rupees, which is incremental, and the loop closes there. Let us take one more example. There is a B2BA amendment, which is there for 110 rupees. 100 which is made into 110. Now, originally the invoice was rejected. Now only the amendment was accepted. Then there comes a problem. Why only the amendment is accepted? That means the customer is going to pay the supplier only 10 rupees. The 100 rupees is not going to pay at all. So then also we need to understand why originally what was happening. The revised one amendment, what has happened. Similarly, for pending, if it is there, please suggest them to accept the invoice original as well as the amended in the same month so that the full ITC of 110 is being received to them. Is there anything on this?
Yeah, so Nandini, I have a question here. So let us say I have raised an invoice of 100 rupees already, and the customer has rejected that particular invoice. And because according to customer, it is not 100 rupees, it is only 80 rupees bill, assume. Okay.
Okay, downward.
So sorry?
Downward?
Yeah, downward amendment.
We have one more for downward.
Okay, currently we are discussing the upward amendment, is it? Okay, so
Yes.
assume that it's not 100, it's 120. So when I do the amendment, I write full 120, right? On the bill. I amend that line from 100 to 120.
Yeah, in returns, we definitely, if we go to amendment tab, it will show as 100. We remove 100 and then we put 120. But the liability for me generated is for only 20 rupees, which is the extra.
Correct. But customer gets full 120 as ITC. He can then claim full 120 ITC, right? Although the original 100 he rejected. So now when it comes to his portal, his IMS, he will be able to see full 120 and he will be able to take full input tax credit, correct?
Yeah, if at all he's rejected the original, then yes.
All right. Okay.
Yes. Okay. So next we have something on the downward amendment. So if at all downward and credit note, let us keep it on a handy basis. Say there is a credit note which is issued or a invoice which is reduced. The liability of the supplier, definitely he is going to take that much of a benefit. Say originally there was an invoice of 100 and now we want to ensure the invoice has to be only 80 rupees. So 20 rupees there is a credit note which is provided. So from the supplier's 3B liability point of view, he is going to take a benefit or a tax liability less he is going to pay to the extent of 20 rupees. Whenever he pays a liability of less 20 rupees, the recipient also has to get a less credit of 20 rupees. And that is the entire matching mechanism which they are trying to make. So let us take an example of first credit note. Simple, plain, raw vanilla credit note. I raise a credit note of 20 rupees. If the customer has accounted of the same 20 rupees credit note and he accepts it, the ITC is going to be reduced to that extent. That is all. And the loop closes entirely. Next complication, if I raise a credit note of 20 rupees, however, he rejects the 20 rupees credit note, what will happen to a supplier 3B liability is very important. The 20 rupees, whatever credit note is there, in the next month 3B liability, that much is going to increase. Though it is not there in my books of accounts, my 3B is going to ask me to pay off the 20 rupees back because that much benefit, whatever is taken as a supplier, is not accepted by the recipient. He is not reversed his ITC. So you as a supplier will not be able to take that much of a benefit in the outward tax liability. So this change, as of now, our mechanism of outward was sorted. E-invoicing raise kar diya. GSTR1 invoice, GSTR1 the same was shown. GSTR3B the output tax liability was shown. Often we could have been seeing my liability auto-populated 3B is not the same as GSTR1. That not a same as GSTR 1 is only because any of the credit note which has been rejected by your customer is added back or added back and auto-populated 3B is going to be there. As of now, there is a deferment of 1 month which is there, and in future budget there's going to be 1 more month benefit is what is expected. Sir, anything on this? Then I'll go to originally rejected or originally accepted.
Okay, so only I think it's already discussed. The thing is that in case of credit note, when you are issuing any credit note, remember that there is a clear clarity before issuance itself with the customer, because if the customer rejects the credit note, there is a problem for you. This is the most important problem in IMS. If there is one problem I have to tell, which is very important in IMS, is if your credit note is rejected by the customer, then you will not get the benefit of reducing the tax liability. In next month GSTR 3B, this liability will get added and automatically added, and then you need to pay that liability because customer is rejecting credit note and customer is indirectly saying that I am not reversing my ITC. Since I am not reversing ITC, government wants next month immediately you to pay that particular tax. And from customer's angle, he cannot keep it pending because government is giving him only 1 month, and within 1 month he need to decide either accept or reject. And if he doesn't record your credit note in the books, he will eventually reject it. तो जब भी आप क्रेडिट नोट रेस कर रहे हो, the system or control in the organization or the communication internally with your sales team, marketing team, or with the customer should be so strong that the customer should not be rejecting your credit note in the IMS. This is what we must ensure. Yes, Nandini, proceed.
Yes. So similarly, when we speak about any invoice which is downward, similar impact will happen. Say as a supplier, originally I had raised an invoice of 100 and I'm trying to tell, okay, it has to be only 80 and I reduce the 20 rupees liability. In 3B, I can take the benefit of this month. However, if my recipient also has to reverse the ITC to the extent of 20 rupees for all the downward amendments. If they do not, then the subsequent month, there is going to be an incremental delta of the basically invoice which is downward and not accepted by your customer. The same impact for downward and credit note impact on the 3B liability of the next month. So whenever there is an amendment or a credit note, both the places do communicate to the customer as to it has to be accepted or there is going to be an impact on the supplier 3B liability.
I think upward and downward amendment of credit note is same only. No? We need not repeat.
It is the same. Yes, it is the same. Okay. Next is when there is a category change. There can be
okay,
few
1 minute,
categories.
Before we go to the category change, only one more aspect I would like to bring out relating to the credit notes is that whenever I am raising a credit note, if the customer has accepted my original invoice, then he should be accepting my credit note. If the customer has accepted my original invoice and he is rejecting my credit note, then there is a problem, which I just explained some time back. On the other hand, if the customer has rejected my original invoice and when I am raising credit note, he should be rejecting my credit note because only then I'll be able to issue the new invoice. In other words, if the customer has rejected my credit note, I should my original invoice, then I should nullify that rejection by raising a credit note, and I should tell customer to also reject the credit note so that that entire transaction get closed, and then I can issue a fresh invoice. Which means that if the original invoice is accepted, credit note also must be accepted. If original invoice is rejected, credit note also must be rejected for the loop to get closed. Otherwise, there is going to be a problem. And for this problem, there is no solution currently in the framework.
Yes. And one very important thing is if you reject something, there is no reinstatement. Once rejected is rejected in IMS. There is nothing like you can go back and look at it. So
there is no control Z, undo function is not there in IMS. At 20 तारीख को एक बार GSTR 3B file हो गया, it means जो आपने accept किया that is accepted for life, जो आपने reject किया that is rejected for life. करेक्ट। तो इसमें कुछ नहीं हो सकता है सर मैंने पहले एक्सेप्ट किया था अभी मेरा गलती से हुआ रिजेक्ट कर सकता हूँ क्या? सॉरी, गवर्नमेंट इज नॉट गिविंग दैट ऑप्शन। ओनली थिंग, अगर आपको पता नहीं है क्या करना है तो पेंडिंग में डालो, बट पेंडिंग में डालने के लिए भी स्पेशली डालना होगा। अगर आप नहीं डालोगे तो इट विल बी डीम्ड एक्सेप्टेड। एंड क्रेडिट नोट आप पेंडिंग में नहीं रख सकते हो, ओनली एक ही महीना पेंडिंग में रख सकते हो। तो द compliance is going to be crazy with the volume of transactions. Even a small error, it will directly have implications. So we need to be more vigilant because of this. Yes, Nandini, let us proceed.
Yes. Sir, in your question, when you just answered them, you said 20th तक को एक बार हो गया तो हो गया, तो 20th से पहले can I keep changing, accept, reject, pending?
हाँ, ओके, यस। तो दो साइकिल्स है उसमें। अगर GSTR 1 फाइल करने के पहले ऑन अ रियल टाइम बेसिस आई कैन डू द एक्सेप्ट रिजेक्ट, और अगर रियल टाइम बेसिस पर मैं कर लेता हूं तो कस्टमर वो चेंज करके GSTR 1 प्रॉपरली फाइल करेगा, विच मीन्स आई विल गेट अ प्रॉपर डिटेल्स एंड आई कैन टेक द क्रेडिट। लेट अस से कस्टमर का नो सॉरी, लेट अस से GSTR 1 ऑलरेडी फाइल हो गया कस्टमर का। इन दैट सिचुएशन 11 तारीख के बाद भी आई कैन टेक एक्शन, बट 11 तारीख के बाद में जब मैं एक्शन लूंगा तो कस्टमर को फिर अमेंडमेंट करना पड़ेगा GSTR 1A से, तो वो अगले महीने रिफ्लेक्ट होगा। दिस मंथ इट विल नॉट बी रिफ्लेक्टेड, देन इट विल व्हाटएवर द कस्टमर विल डू इट विल रिफ्लेक्टेड इन द नेक्स्ट मंथ, बट आफ्टर 20th gone, can't do anything. So before 11th to 20th and post 20th, this is how it is.
Yes. So 11th to 20th I can keep changing, accept, reject or pending, but एक बार 3B फाइल हो गया तो whatever is action done, it's permanent, right sir?
Yes.
Yes. So this is a simple dashboard of various options which is available. To summarize whatever we spoke, if it is a B2B and a debit note, then accept, reject or pending, all three are open. If there is a B2BA amendment, that is a downward or an upward amendment, then upward amendment only, then accept, reject or pending is there. Or a B2B downward amendment, accept is possible, reject is possible, pending is not possible. And if there is a rejection, then it is going to add to the supplier liability. So this is overall summary of it. I hope I was able to communicate or and not to confuse.
So we will now go into the recipient side and discuss that properly. This is what the table you were just explaining, right?
Yes.
On the recipient side. Okay, so let me just elaborate on that. So on the recipient side, till now what we discussed is myself as a supplier. Now let us change the roles. I am a recipient, and what is that I should do on my purchases? So whenever I have the purchases listed in the IMS, first thing I will do is I will take my books, which is my purchase register as per books. I will run the reconciliation from the data in IMS versus the data in purchase register, which is also what I am currently doing with 2B. But instead of 2B, now I'll be doing with IMS records, correct? Yes. Once I run this reconciliation, there are two possibilities. Either it gets matched or it gets unmatched, correct? There is possible match and all those things, which I'm not getting into right now. Now, let us say if it gets matched. If it gets matched, then I need to accept it. There will not be any problem. If it is matched and if I am rejecting it, then there is a problem because it is there in my books. Because supplier ने भी डाला invoice और मैंने गलती से उसको reject कर दिया, then all the problems will come. My ITC gets reduced and supplier's liability, my ITC rather, उतना मेरा ITC कम हो जाएगा, correct? और the best thing is to keep pending. लेकिन अगर मैच हो गया तो पेंडिंग भी रखने की कोई नीड है नहीं, करेक्ट? तो फर्स्ट एंड फंडामेंटल थिंग, व्हेन आई रन द ITC reconciliation, whatever is matched, I can simply accept that particular thing, whatever that is matched, and I should not reject something that is matched. Only one catch or a differentiation here would be is the credit notes. If the supplier is uploading any credit notes, and let us say that also got matched with my reconciliation, I can accept that credit note also. There is no problem because it is there in my books and it is also there in the portal what the supplier has given. But before, for the credit notes, I would say more specifically, because my ITC, I'm reducing my ITC, just that there should be some system or mechanism to verify what action I have done to the original invoice. Because if my original invoice was rejected and credit note I'm accepting, then there will be a problem. Correct?
Yes.
So,
Yes.
so this is one the matched part. Now, if the data is not matched, whatever the invoices which the supplier has uploaded, whatever the debit notes which the supplier has uploaded, if I don't know, better to keep it pending. Don't do anything. Please, 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 it's a request. Don't reject. Again, we are going to issue advisory from our office. But as a part of this webinar, I am saying that if a particular invoice is not there in the IMS, it is mismatched, don't reject that. Keep it as a pending. Maybe it will come later, in the books. Maybe it is lying with the stores department. Maybe it is lying with the purchase department, or maybe there is a delay in accounting from our side. There can be numerous reasons. Please don't reject, because if you reject, then the only option is customer has to again issue a credit note, which you should again reject, and again he has to issue an invoice, which is a big drama. So if there is a mismatch in the invoice or debit notes, just keep it pending. There is no restriction in the law. Next year till September, October, you have a time to resolve. Now, if the supplier has issued a credit note, that credit note, you cannot keep it pending as far as government's rule is concerned. So as far as a credit note is concerned, you have 1 month time to communicate with the supplier कि भाई ये credit note क्या है, कौन से bill का है, and all those things. Within 1 month, you should be ready to take the action, either accept or reject. If within 1 month you still don't have clarity, then you have to take action. Correct? So my suggestion is, the action that should be followed should be basis the original invoice. If the original invoice is accepted, accept the credit note. If the original invoice is rejected, reject the credit note. Correct? This can be an action on the credit note. But if अगर कोई चीज आपके बुक्स में दिख ही नहीं रहा है, mismatch है, it is not there in your books, लेकिन पोर्टल पे दिख रहा है, तो you don't have a choice but to reject that particular credit note, because वो आपके बुक्स में है नहीं credit note. Correct? So this is how the segregation, as a purchaser, this is how I need to take the actions. Yes.
Yes. So every rejection has 3 more steps with it. One is definitely credit note and invoicing, e-invoicing reconciliation, e-way bill reconciliation. So every rejection has 3 to 4 actions more about it. So every rejection should be carefully done is one more aspect to be considered. Okay, so I think this is the same fundamentals, whatever sir told. If it is unclear, then keep it pending. And if it is next, an important aspect is somebody who would tell if something is ineligible, may reject kar do kya? That is one question which would come. No, if we start anything which is ineligible and we start rejecting it, then the department would again come back and ask you that revenue nahi mila. So if something is ineligible and it is there in the books of accounts, accept it, take it in 2B, reconcile with books of accounts, and in GSTR 3B do a permanent reversal. That is one more aspect to be considered for ineligible ITC. Now, with the increase in the IMS, definitely the communication between the taxpayer on the GST portal also can be increased. In the GST, the IMS dashboard, there is 2 dashboards. One is to view the invoices and second is to communication to the taxpayer. I'll show you the dashboard, how it appears. So whenever there is a mismatch, you can there and then itself communicate with the supplier as to this much as mismatch and actions to be taken on either side of the path. I think most of this we've already covered, so I'm not getting into the thing. Covered
Nandini?
Yeah, we covered this. Iska pehle wala slide we already covered. Okay. Again, coming back to actions to be taken and all those things. So we've covered this.
Okay, so what we can do now is, We have covered the session both from the sales side as well as the purchase side. As far as IMS is concerned, the first part of the discussion. The second part of the discussion is ISD. But before that, I would say, Nandini, quickly, if you can
I'll
run
just
through the
few
portal.
action plans also we've plotted. So I think we'll discuss that also.
Yeah, you can talk about few action plans, few best practices to be followed, precautions to be taken, and maybe a quick run through of the portal. If you can show, audience will be able to relate things. And then 15-20 minutes, we will take questions relating to IMS, and then we'll move to ISD.
Fair enough, sir. Fair enough. Yeah. Few other important aspects here you need to consider is in IMS, what doesn't appear, but which is important for GSTR 3B is reverse charge items, import of goods. Definitely when I tell reverse charge, it is also import of services or the local reverse charge. It will be there as a part of 2B, but it will not come as a part of IMS. Same thing with the import of goods. Then anything which I voluntarily reverse for 180 days non-payment to vendor, that also doesn't come in the GSTR 2B, but we need to voluntarily take actions in 3B. Then any ISD credits that also do not flow with IMS. So that as of now, they have not given any interlinking between ISD and IMS. Further, any 16.4, wherever there is any POS error, where say for a hotel credit which is outside the state of Maharashtra, anything which is 16.4 ineligibility or after the due date the supplier is uploaded. So these credits are definitely a part of 2B, but will not be a part of your IMS. This is one aspect. Next,
so
let us
reverse
go
charge, import, ISD, reverse charge, all these will not come in IMS. I will directly flow in 2B, correct?
Yes, yes.
Okay.
Once this is all done, the future of IMS and GSTR 3B, they're also planning to have a hard locking system as to once anything is accepted in IMS, that means it's a part of 2B, and in GSTR 3B, few particular tables, especially 4A5, the all other ITC which we take, that they are planning to make a hard locking system. That is the long-term plan, of course. Okay, few plan of actions as to on the outward side, I would just go and tell you over here. As an outward, as a customer, how would I come to know? Sorry, as a supplier. So as a supplier, how would I come? Do I take any actions on IMS? Absolutely no. But my GST portal, the IMS dashboard for me as a supplier will show me the invoices which are accepted by my customer, rejected and kept pending, same way invoice and credit notes. So that is very important for me as a supplier to analyze it and ensure any actions which is required. For example, anything which is accepted, do I take any actions or do I analyze anything further? Definitely not. But however, something which is rejected and pending, I need to analyze the same. What is the ideal time frame to analyze it? As a customer, they have time up to they filing their GSTR 3B returns, that is 20th. So from 21st of any month to the books closure of a subsequent month. For example, in December, if we take as an example, 21st of January, so 31st of January, if at all I'm assuming that as a closure of my books, that is the ideal time period. I should understand as a supplier what is accepted, what is rejected, what is kept pending, and I can start communicating with my customer as to why, if anything was rejected or kept pending. Say, for example, invoice is rejected, then definitely we need to start communicating, understand, okay, was it due to revision? Okay, if that revision was already rectified by issuing of an invoice in the credit note and again an invoice in the month of January, then the loop closes to me. Next month liability, there is no impact. If at all there is a rejection, then reinstatement of the credit note, whether it's done in the month of January, whether the invoice is also looped, so that in the month in which I am analyzing, the same month I'm able to take actions. And for the next month liability, I'm closing the loop. One very foremost important thing is, if at all a credit note is rejected, whenever I communicate with the customer, they're telling whatever is being purchase returns, I will raise an invoice. Then the credit note and invoice, both the side leg has to be same. As of today, it's a very big misunderstanding. As a supplier, I am telling mera sales return se I am going to do a credit note. My customer is telling for me it is a purchase returns, I'm going to raise an invoice. So this loop in silos, whatever was happening in future is visible, transparent, and has to be bought in the same leg. And primary responsibility ideally should be the accounts receivable team, because they are normally discussing with the customer, and secondary responsibility ideally should be the tax team. So they perform a secondary reconciliations of the all those things which are open-ended. Sir, anything to add on this?
Nothing.
Okay. Similarly, action to be taken for me as a customer. Definitely, in earlier slide, it was only viewing access and internal communication, and here the actions on the GST portal. So here also, if there is an acceptance, I would tell otherwise. Check for only those things which has to be rejected and pending. Any which ways, if you don't accept anything, then it is a deemed acceptance. So work on only those things which are wanting to be rejected or kept pending. So who needs to do it? I would suggest keep, first of all, identify your vendors, whether the e-invoicing and IMS and GST are all the same. If they are on a day-to-day basis, on a live tracking basis, you can take actions. And once you take actions, you have a trust that they're not going to change it. Because if you take actions and in your record, you've already told, I have already taken acceptance, I will get the credit. And if they change it, then whatever actions you have taken is going to be reversed, and again you need to reconcile. So be careful to identify your vendors, whether it is a complete systematic oriented e-invoicing, say sab kuch ho raha hai, then take actions on a daily basis and you're done with it. Say there are few more supplier office who file early GSTR1, say 9th ko they file. So 10th onwards you can start your reconciliation activity, which is going to be a final activity, of course. However, rest everything kept aside, what is the ideal time if you do not know your vendor so well? 14th to 19th, you can go on doing the reconciliation and take the ideal actions. Now, whenever there is an invoice rejection, definitely do intimate to your customer as to why it was rejected, so that they take actions and you get a complete credit in the subsequent month only, rather than waiting for the future. Similarly, if there is a credit note rejection, that also immediately intimate to them. Also check in future your purchase clauses. There could be clauses that you should not reject without intimating. If there is a rejection, there is a working capital impact. So be careful as a customer also, whenever there is a CN which is rejection, what are the terms and conditions you would have agreed for? Who is the ideal team here? Definitely the accounts receivable team, and a secondary team should be the tax team. I think this is some future action plans which is must and should require. I'll just go take you through the IMS dashboard, how it appears on the inward side. So this is how it would appear. It would definitely give you the GST number of your supplier, invoice numbers, whether it is a regular invoice or whatever. Then it will give you three options: accept, reject, pending, or no actions. Can you take a bulk action over here? Yes, you can take a bulk action over here. However, all accept should be a bulk action, all rejection should be a bulk action. That is the only change management which will be required. I cannot tell I select 10 invoices, 5 ko accept karo, 5 ko reject karo. Simultaneously, I cannot do. If I select 10, all 10 has to be accepted or all 10 has to be rejected. Can I do multi GST number? Yes, I can. This, whatever I'm talking about, is for somebody who has less than 500 invoices. If you have 500 plus 500 invoices in a month, whatever we spoke has to be done at a GSTN level. First, you search the GSTN level of your supplier, then all invoices, whatever is visible, multi-acceptance or multi-rejection or multi-kept in pending can be done. And that is a chain for more than 500 and less than 500 invoices.
So
can you also...
I have a question.
Yes.
I have a question here. You are saying that I can do bulk also. For less than 500, I can do bulk, but all accept at once, all reject at once, all pending at once. I cannot do bulk with accept, reject, pending all together like that. Okay. Yes, yes. And if it is more than 500 invoices, then I can do GST number wise, not invoice wise. But within GST number, I can again choose invoice numbers. I can tick and untick, one by one, all those things. Okay, but tell me one more thing, Nandini, can I upload the Excel sheet? I will do all my accept reject in Excel sheet. I will simply upload that Excel sheet here, which system will go and do the changes. Is that possible?
No, with directly GST portal, unfortunately, it is not possible. There is no JSON mechanism which is provided. However, softwares are available who have allowed the integration to GST portal. Only APIs are there. Direct GST portal, there is no integration.
So if currently I don't have any software, then I don't have a choice but to do this manually. And
Yes.
if I have a software, then I can simply push my Excel sheet
Yes.
into the system.
Yes.
Okay.
Yes. The software could help you to inter-reconcile purchase register and IMS and also suggest you what is the ideal action you need to take. And then manually you can just cross-check it.
All right.
Yes. So it'll also give you one more feature as to what was the source of this particular invoice, whether it came from GSTR1, whether it came from IFF, whether it came from 1A. This source also is very important to understand from where does your vendor uploaded it. Similarly, I'll just take you to the dashboard of the customer. Okay, here no actions can be taken, but you can only view it. So this is on the outward supplies, wherever no action can be taken, but important to understand. See here that universal view is for B2B. Rejected records is the exception records wherever there is a invoice which is rejected, credit note which is rejected. Especially credit note which is rejected is visible over here. So you can understand from this viewing as to how my outward tax liability. मेरे R1 में तो 1 लाख दिखाया, 3B में auto population में 1,20,000 आ रहा, तो 20,000 कैसा आ रहा? How many people rejected my credit notes? Only then this tab is very important. Here also for viewing access on the outward, you can filter it through GST number, you can filter it through sources, you can filter it through invoice number, period. Various filters are available, but the dashboard will appear like this. I think that's it on the portal visibility. Few more action points are very important is whether your manpower is completely prepared to understand and handle this, whether your IT system is going to be capable of handling it, whether your vendors are all very tax compliant, can you bifurcate them and make action point based on the vendor level? What is the discount mechanism also look through, whether you are considering it as a trade discount and the supplier is considering it as a similar trade discount, or both of you are on the same page. What is the role responsibility for AP team, AR team, simultaneously tax team, internally understanding what is the daily SOP, monthly SOP also needs to be tackled at. Now, all these things has to be at transaction level and at specific vendor level. I think this should be the broad future to understand the implementation of IMS.
Okay, yeah, very important is that this IMS, in future, as soon as it gets implemented or, we start implementing it, this is not just the role of a tax team in the organization. A very close coordination with the purchase team, supply chain management team, marketing team, sales team, AR, AP team would be required so that because tax team will have to take actions basis what they get the feedback from the other teams. So this is going any non-compliance, the hit can be very big amount because we are in GST, not in income tax. Because in GST the hit is 18% on the gross, which can sometimes be a significant amount. So now what we will do is that next 15-20 minutes, we can simply take questions on IMS. You can either put a question in a Q&A or just raise your hand. We would like to answer. We can also ask a question very specific to your organization. But only thing is, let us keep a question very simple and straight and maybe one question or max 2 questions so that we can give chance to everybody. And ISD, we will take in the last 15, 20, 30 minutes, whatever that is left over with us. Yes, so
there is one question, sir. In case of credit note is related to ineligible credit like employee insurance.
Yeah, you would like to take that?
Yeah. So I think we spoke in the course of discussion. This is though ineligible in IMS, do not reject it. accept it, let the flow be there to your GSTR 2B, and in 3B, show it as a permanent reversal. That is the ideal answer.
Perfect. So any more questions? If there are no questions, then we are assuming you have not understood anything, or rather I will take it as an appreciation that you have understood everything. But just think over, what could be the specific dynamics in your business. One issue which I'm able to recollect is sometimes what happens, supplier issues a credit note, and against that credit note, instead of me issuing a debit note, I will issue a corresponding invoice on the supplier. तो what happens, मेरा invoice उसके 2B में दिख रहा है और उसका credit note मेरे 2B में दिख रहा है, वो कभी match होगा ही नहीं. So that is one area of issue which needs to be resolved. Especially OEMs में ये बहुत commonly होता है. अच्छा, बहुत बार ये भी होता है that customer, especially in automobile industry, where customer debits and later I come to know that okay, this has been debited to me. I have raised a bill and whatever that's not proper, and customer simply debits me for that, and there is a counter bill and I come to know about it later. So these all things needs to be just kept pending. Or let us say if I raise a credit note and customer has not accepted that particular credit note, but he need to take an action immediately. So it reduces my liability. So these are the typical issues or problems that are there.
Many a times
more
these
questions?
invoices of customers or for penalties are not at all viewed. So I think with IMS it is viewed on a regular basis. That is also going to help for
Yes,
expense of
correct. Correct. Any more questions anyone have? How to identify IMS is applicable or not to a particular company? I think there is no threshold limit, na, Nandini? Is there a threshold limit?
There is no threshold limit.
So, Smita ji, there is no threshold limit. Unlike e-invoicing, like there is a threshold limit and all those things, IMS, there is no threshold limit. It is applicable to everyone, this particular compliant. In fact, if a particular supplier is under that QRMP or that quarterly thing, then this gets reflected once in a quarter. So there is no threshold. Everybody, it is there.
I think the ideal question could be, how do I identify whether the presently it is IMS use kar rahe nahi? I think that is the question which could be there, sir.
Presently who? The supplier?
Presently if the supplier is using IMS or not, or presently if my customer is using IMS or not.
So that is something we should assume that they've started using it because the portal is in place, everything is in place, and businesses have started using it. So if you will come to know once your customer rejects or accepts, you will on the supplier's view, you will get that hindsight and through which you will come to know. Correct, Nandini?
Yes, that's the only way.
Yeah, Pooja, can we unmute Mr. Yadnesh?
Yadnesh sir, could you please unmute your mic and speak?
Hello.
Yes,
Yeah.
yes, Yadnesh ji.
Hello.
Hello, you are audible.
You're audible, Yagnesh.
Hello. I think there is some problem. Yeah, anyone else?
There's one more question. Whether we need to raise a credit note at invoice level now, considering accept and reject option in IMS functionality.
No, as such that requirement
Sir.
is not there. Praful. Yadnesh, just we will just answer this question and then we can take your question. Huh? Just give us 1 minute. So as far as the credit note is concerned, so the question is that earlier there was this provision that every credit note must be linked to the original invoice. But later in 2019, they removed that. So today, if there is a credit note, I don't know it is pertaining to which invoice. Now, this is a real problem because let us say on my portal, there is certainly a credit note and I don't know it is pertaining to which invoice. And same with my customer. I have raised a credit note, my customer don't know it is pertaining to which invoice. So even now, post IMS, there is no mechanism. Government does not want you to mandatorily link the credit note with the invoice. So that is not there as such. And the only way is to resolve this issue. If a customer wants to know this credit note against which invoice, I want to see whether that invoice is accepted or rejected. Is that you need to communicate the details of the invoice as and when the customer asks. But Nandini, if I want to suo moto write the details of invoice, can I write in the GSTR one?
No, there is no tab available.
So the tab itself is removed now.
Yes, yes.
Okay, so again, this is one aspect where I want to bring attention of everybody that, once this was removed in GSTR 1 system in 2019, businesses today don't even maintain the log or a tab as to this credit note pertains to which invoice. My suggestion is that, we need to maintain a tab internally at least that this credit note pertains to which invoice, so that tomorrow in IMS, if the question comes, I can know, okay, this is pertaining to which invoice and I need to accordingly do this. So Praful, I hope your query is answered. In case it is not, you can just add to your question. So we can now, Yadnesh, you can just unmute and ask your question.
Modi from this side.
Yeah, you're audible now.
Yeah. Sir, in our case, in few vendors, we are providing the materials like diesels and some other material to the, you can say, vendor during the construction. So what is the best treatment in that case? We have to wait for the credit note, or simply right now we are debiting to the customer vendors. So what the correct practice we have to follow now in IMS?
You are currently providing what to your customers? Diesel.
Like Sarika, diesels and other materials we are supplying to the vendors, from procuring from ourselves or sometimes on the behalf of vendors.
Okay. So on the behalf of vendor, you are procuring and giving to the vendor.
Yeah.
Okay. And this on whatever you are procuring, you are claiming ITC, input tax credit.
No, sometimes it is like diesel, or sometimes it is
no. If it is a regular material, whatever you are purchasing on behalf of the vendor, you are claiming ITC, and you are issuing the material to your vendor, correct?
Yeah.
So when you are issuing a material to the vendor, the material is moving under a proper tax invoice along with e-invoice and e-way bill and all those documents.
We are not raising the invoice basically. We are directly debiting to the vendors.
Okay. So the contract is, let us say, a particular material, vendor is to give the material, but just you are, doing it on behalf of the vendor. So the vendor will raise the bill of full 100 rupees. From the bill, you are simply debiting this amount to the vendor, whatever you have done, which vendor should have done on your behalf. Okay.
Yeah.
So this particular transaction does not come in the ambit of tax invoice or e-invoice, anything, no, Nandini? This will be simply, this will be simply
no IMS also.
IMS would not be applicable on this particular thing. Only thing is, I would recommend that you refer. There was one judgment of Supreme Court of Bayana Builders on the same issue, where something which is contractually liable by someone else, but if I do on their behalf, the GST still would be applicable on the full value which the vendor is obligated. So I'm assuming that is taken care. If that is not taken care, then this particular thing could have a leakage in the taxation. Maybe we can discuss that particular thing separately. For now, IMS would not be applicable for this aspect, this leg of the transaction.
Okay.
Yes.
There's one more
other
question. Yeah. What will be the implication if I have taken no action? I will not accept, reject, and pending.
That is not possible, sir. You would have to take action, either accept, reject, or pending. But action is required. If you don't take action, then system will take action on your behalf and it will accept everything. You can say that's a fantastic thing, but the only problem is that in the case of credit note, you will suddenly see that your ITC is getting flushed out of your system. So as long as it is matched maybe one thing can be looked at is that, let us say I have 95% match. To the extent of 95%, don't take any action. It will get auto accepted. Only on the 5% you take action. Precisely वैसे ही होगा. आप match mismatch run करोगे, जो accept हो गया, match हो गया, that don't take any action. It will get auto accepted. On the mismatch items, we need actions.
Yes.
Any further questions?
No, as of now, no.
All right. ठीक है. So, okay. So in case you still have any other questions or you want us to, do a specific, please give the list of your questions to us and we'll reply over email, or we can have a small discussion with you individually with you for the specific facts or case of your business. Now, Pooja, you have the PPT of ISD.
Yes, sir.
So can you please display that?
Yes.
So apart from IMS, the next animal is Input Service Distributor, ISD. Now, ISD is going to be effective from 1st of April 2025. There is no confusion on that. The notification is already issued, dated November 16, dated 16/2024. So from 1st of April 2025, input service distribution is mandatory for everybody having multiple GST registrations. Next slide. So this is the background of coverage that we'll be doing today. Next slide. So this is the history of ISD, wherein, originally ISD got introduced when the GST law came, but then it was not mandatory. And in the 50th GST Council, they have clearly clarified this, followed by circular issued, Circular 199, where they clearly mention that, ISD is not mandatory and it is optional. And in the 52nd GST Council, first time they mentioned that they want to make ISD mandatory, and then they made relevant statutory changes via Finance Act 2024. And since the amendments changes were made in the last year budget 2024, it took 1 year for them to implement this because all the states had to pass them. It has to be finally implemented. So just to give you some hindsight or the background as to what is this ISD and why this ISD is required. What is happening, or what was happening rather, is GST is a consumption-based destination tax, which means that government wants that the place where the goods or services are consumed, that is the place the tax is, or the revenue of the tax is ultimately collected. So when there is a transaction between two registrations of the same company, what was currently happening is that there was a system of cross charge where, let us say I supply some goods from Haryana to Maharashtra, or I provide some services from Maharashtra to Karnataka. I was raising an internal invoice within the same company and I was paying GST. But there was a catch here because there was no provision which strictly mandated valuation relating to this particular aspect, which means if I supply a service from Maharashtra to Karnataka and the value of the service is, let us say, 1 lakh rupees, the law currently stated that even if you raise a value which is, open market value and the recipient is eligible for input tax credit, we will not question the valuation and the transaction gets out. So what was happening because of this is the recipient state was not getting the proper collection of taxes. In many businesses, what happened is the administration, the support staff, the the entire IT function, admin function, accounting function, payroll function, HR function are in the central, that is, are in the centralized head office or a corporate office. For example, Maharashtra, Karnataka, or for that matter, NCR, or Tamil Nadu are few hubs where all the costs relating to administration, IT, HR, accounting are incurred. But that cost, there is no mechanism to load that cost and pass the expenditure to other GST registrations. Currently, businesses were not doing properly, or there was no strict mechanism. Because GST is a consumption-based tax, government wants to have a control of this entire thing. And that's why they brought this new thing called input service distributor. Now, input service distributor is not a new concept. It was there in central excise also. They brought this, the same concept, they brought this in GST. So with input service distributor now getting mandatory, what is going to happen is each and every bill which is common pertaining to organization as a whole or for multiple GST registrations, you need to distribute the credit. Pooja, can we go to next slide? So in a way, in the 50th GST Council, when they issued Circular 199, they stated about internally generated services and input service distributor. Now we need to understand that these are two different things. For now, internally generated services, I'll just park this. As and when I come to that slide, I'll explain what exactly is this concept of internally generated services. Can we go to the next slide, Pooja? So this is the real text of the law, section 2, subsection 61 and section 20. Now, if you read section 2, it says input services distributor means an office of the supplier of goods or services or both, which receives tax invoice towards the receipt of input services, including invoices in respect of services liable under reverse charge for or on behalf of distinct persons and liable to distribute. So what I'm trying to highlight here are two sentences. Two sentences here are very, very critical. For or on behalf of distinct person. So which means that distinct person means, let us say I am a company, I have a registration in Maharashtra. I also have a registration in Karnataka, Haryana, and Gujarat. So Maharashtra is the distinct person of Karnataka. Karnataka is a distinct person of Gujarat. Gujarat is a distinct person of Haryana. So we all the registrations are distinct persons of one another. So if there is an expenditure that goes in one GST number, but that expenditure is for or on behalf of other distinct person, then that expenditure has to be distributed. The input tax credit has to be distributed. Now here the language is liable to distribute. Liable to distribute means till now it was optional and now they made it mandatory. Same thing if you see section 20, the language is now changed and the language is shall be required. Shall be required means now the distribution shall be required. Earlier that term was not there in the law. So just to give you an example, first of all, another thing is that this input service distributor as a concept is only for distribution of services. This concept is not there for distribution of goods. So let us say if I incur an expenditure on a server in my head office and I purchase server racks and other hardware or infrastructure of server, which is common for organization as a whole, on that the distribution is not required because this is not the concept of input goods distributor. This is a concept of input services distributor. Now, on the other hand, let us say I am an organization, just to give an example of our own firm, where we have administration, HR, IT, and payroll, and few other things, even accounting, which is done from head office. So what happens is that, let us say a company takes the services of internal auditor. The internal auditor does the audit for all the branches, but the bill is raised on the head office. Now, currently what was happening, head office was taking input tax credit and head office was raising a bill on all the branches. Going forward, what will happen is head office will take the input tax credit in the ISD registration. They will not take the input tax credit in the main registration. They will take the input tax credit in the ISD registration, and they will distribute that input tax credit to all the branches, which means any company which has got multiple GST numbers, and if there are common expenses pertaining to head office, pertaining to all the locations which are incurred in the head office, then that company needs to obtain and take a registration of ISD. ISD is a new GST number, and we have to obtain the new GST number by making an application in the GST portal. In future, all the common expenses, you should immediately raise a communication to your suppliers that all the common expenses, please don't bill in my regular GST number. Please raise a bill on my ISD GST number. So only once the bill comes in ISD GST number, you will be able to distribute this particular credit. Problem is, if you are not communicating this to your supplier, or if you are not timely communicating, and if the supplier raises a bill on your regular GST number, then the only thing is to ask the supplier to raise a credit note and raise a fresh bill. So a communication or a message to the suppliers has to go immediately. First of all, we need to identify what are my expenses which are common and what are my expenses which are not common. And that is a big exercise that needs to be carried out at a GL level, transaction level, supplier level. And once you identify the expenses which are common, then you need to identify the expenses are common for all the GST numbers, or the expenses are common for specific GST numbers, or the expenses are common for only another GST number. Pooja, can you go to the next slide? So just to give an example, let us say my head office is doing the internal audit. The internal audit is carried for all the branches. Then what I will do, I will ask my internal auditor to raise the bill on my ISD. Once the bill comes on ISD, I will distribute the credit to all my branches. Now let us say for some reason, I would want to only carry out the internal audit of my depots. And the depots are, I have 10 GST registration. Out of that, 4 are manufacturing locations and 6 are depots. So now the internal auditor is doing audit only of the depot. So in that case, the internal auditor who is carrying the audit of a depots, the bill that comes on ISD, I will now not distribute this credit to all the locations. I will distribute this credit only to the 6 GST numbers, which are the specific depots. On the third hand, let us say I find that a particular branch requires special focus or special attention, and I want to get a special internal audit done for that branch. Now the bill which comes from the internal auditor, again, this bill I will not distribute either to all the locations or to specific location. This bill directly goes and gets distributed only to that specific location for which the audit is done. In a nutshell, what I'm trying to say is that my first duty is to identify all the common expenses. And my second duty is to attribute the recipient, whether this is common for organization as a whole, whether this is common for a specific division. Somebody would have SCM division separate, manufacturing division separate, engineering division separate. Is this expenditure relating to these specific divisions? Then only those divisions I will distribute. Or is this expenditure specific to a particular state or a GST number? Let me tell you, this exercise, although looks very easy when I say and on the PPT, but to actually be doing this is extremely difficult because it requires a lot of subjectivity is involved in the entire process, apart from a very close coordination and communication that is required with the supplier in this regard. Now, very interesting thing which another I would like to highlight here is that even the ineligible credits are required to be distributed. For example, let us say I do a group life insurance for all my employees in the organization. Currently, that credit is ineligible. So one can argue that why to even take the credit? Let me directly expense off that credit in the books of accounts in the HO itself. It is not correct. Government wants you to take that expenditure in the ISD, distribute that credit in the all the locations, and in that location's GST number you call it as an ineligible credit and reverse the corresponding input tax credit. The reason it is important is because the moment you distribute, the input tax credit or the GST portion is going as a revenue collection to that state government. So if you are not distributing ineligible credit, that state government is not getting that collection of the GST. So government indirectly through ISD, they are trying to indirectly ask us to do the right collection with the right treasury is what the exercise that we are doing for government by doing this ISD thing. Very important, input service distribution is required only for those branches which are operational in the current year. Let us say this year, one of my state is not operational. We are shut down that particular business. So in that case, the distribution is not required, because if you wrongly distribute, that credit is going to sit over there and it will become cost. Hence, a very good proactive communication is required between the tax team and the business team and the consultant, so that a wrong credit is not distributed to the wrong state which is not operational or does not going to have a lot of movement over there. Otherwise, the credit would go and sit over there and become a cost or a working capital blockage. So that is one very, very important aspect I would like to highlight. Next, Pooja. I think this is what I've already covered, that even ineligible credits are required to be distributed. Next. Next, very, very important aspect. Let us say something I have distributed, but I have wrongly distributed. Now I need to correct this. So the best way or the only way to correct this is by way of issuing a debit note or a credit note. Let us say I have distributed 100 rupees to a particular location, but what was correctly to be distributed is only 50 rupees. So I need to raise a credit note, and by raising a credit note, I can reduce that distribution. Next, very, very important aspect is the distribution has to be basis the turnover. So let us say this year I want to distribute for financial year in the April 2025. If I have to distribute, then I need to take the turnover as per full year turnover from April 2024 to March 2025. When I say full year turnover, turnover not as per your accounting standards, turnover as recorded in the GST law. So first thing first, by March or February, you should have the ratios freezed. Okay, this is a ratio at which I am going to distribute, which means that by March end, as soon as you close the March bill, immediately in April, your ratios should be very much freezed, because in that ratio, full year ISD is going to be distributed in that ratio. Make sure that your ratios are proper, because if something gets wrongly distributed to a state, then that amount gets blocked. Very important is that, let us say you have a particular registration which has started only in the last year, or it has started only in this financial year, and last year that was not there. And if you don't distribute, then others, then other state is ultimately getting the extra distribution, and you can, in the ratio will not be helping, because this GST number has started only in this financial year. In that case, government is saying that you can change your distribution ratio and distribute only basis the last quarter and not the last financial year. So whether to distribute based on the last financial year or to distribute based on the last quarter is something, an important decision to be made. Pooja, can we go to the next slide? Yeah, this is exactly what I wanted to communicate about the last quarter or the last financial year. And when I say turnover, turnover also includes non-taxable supplies. So if somebody is in the business of, let us say, alcoholic liquor for human consumption, or petroleum products, or the products which are outside the ambit of GST, even that would be considered as a turnover for the purpose of distribution of credit. Next slide. So this is a concept of ISD, wherein I am distributing all my common credits to all the states. Now there is something called internally generated services. So what is the difference between ISD and internally generated services? Internally generated service is something where one branch is providing the service to other branch. This is not a ISD. For example, let us say in our own office, let us say there is a case of a client, and the client is attached to the Pune location, that is a Maharashtra, but the case is coming in Tamil Nadu. So the Pune office files the appeal, and the hearing is carried out by the Tamil Nadu office. In that case, the Tamil Nadu office is providing the service to Pune office. For this, Tamil Nadu office will raise a bill to the Pune office, and Pune office will raise a bill to the client. So this will be by way of a cross charge. There will be a bill raised, tax invoice raised by the one branch to another. The cross charge can be there from HO to the branches. The cross charge can be there from branches to the HO. The cross charge can also be there from branches to the branches. So for example, companies would have that the material is provided by one GST number, but the ground level maintenance is done by other GST number. Or let us say the material is issued by the one GST number, installation is done by the team, local team in the Karnataka. So there can be a lot of coordination, communication, interaction, and a joint working between the locations to eventually provide the service to the customer. That will come under cross charge. So each and every business would have to really evaluate their various business transactions types have to be mapped, and those transactions need to be looked at. What is the coordination communication that is happening between the branches and HO and branches? What is the role that branch is doing? What is the role that HO is doing? And that role, we need to assign a value to that. And then there has to be a cross charge. And let me tell you, cross charge is also mandatorily required to be done. So ISD is where a third party bill comes, where there is an auditor, landowner, or IT bill, or payroll function, HR function, something which is a third party expenditure becomes a part of ISD. Something that is internally generated service, a coordination, communication exercise between the locations, become a part of cross charge. This is the difference between ISD and cross charge. Facts of each case has to be separately looked at. Next slide, Pooja. So this is what, all the above provisions, whatever I've told, I've summarized in a tabular form. I would not go in detail of this. The PPT we will share so you can have a look. Next slide. Next. Yeah. So this is only for as an example I've given. Don't consider this as, final, but we need to look at each and every expenditure. For example, internal audit, statutory audit, tax audit, all these expenses look like it is more like an ISD, not a cross charge. Legal service, advocate, professional, consultant look like it is ISD and not cross charge. Director sitting fees, payroll, HR. Again, payroll, HR processing service, not the salary cost. Let us say if I have my own HR team, sits in Bombay, Mumbai, and that team cost, please don't cross charge because that is not required. Salary cost is not required to be cross charged. But you take a service of external HR consultant and the external HR consultant or a payroll consultant is billing to your Mumbai location, that particular bill will come under ISD and get distributed. Correct? So on a case-to-case basis, this needs to be evaluated. Next. In fact, there is one confusion on the office rent or a building rent, what to do, because let us say head office is there and head office is having a big building which is on rent. So whether the building rent of head office also requires to be distributed through ISD, in my opinion, yes, because the building is again commonly used for all the locations, and the people sitting in building are not working only for Maharashtra, they are working for organization as a whole. Valuation for cross charge, government has simply mentioned a mechanism that if it is open market value has to be applied, and if the recipient is eligible for input tax credit, then they will not question the open market value. Having said that, I will not say write anything or put a nil value or just issue a bill of 10,000 rupees. You need to arrive at a fair valuation. If the valuation is not possible to be arrived, then what is that at which the customer, if I sell to an independent customer, what will be the value that I need to take? If that is also not possible, then cost plus 10%. Next very important aspect is that how to route RCM, because let us say head office is incurring some RCM expenses. So I cannot pay RCM through ISD. ISD is only a distribution mechanism. Then what I would do, I would make a payment through a regular GST number, bill from that number to the ISD number, take the credit in ISD and again distribute it back. This is an unfortunate, double thing which we need to do. But if you incur any expenditure which is common and that expenditure is pertaining to reverse charge, then you need to pay from one GST number, bill it in ISD and then distribute. Whether I need to do 2A 2B reconciliation for the ISD bills, answer is no. Whenever you receive a bill in ISD, 2A 2B reconciliation is not required. I think government has not looked at it by now, but I'm sure they will look at it in future. But after the bill comes in ISD, and then from the ISD, when you are distributing to the locations, that time the 2A 2B reconciliation or IMS and all those things will come into picture. Whether ISD registration is to be taken only by the head office or by the branches or by the regional offices, answer is no. Any office where you feel that in your business common expenses will be incurred, you need to take ISD registration. So it is a myth or it is a misconception that ISD registration is required to be taken only in head office is a misconception. ISD registration needs to be taken in any place wherever you have common expenses. Just to give an example, let us say in bank. In bank, there will be regional offices, and each regional office will have expenditures pertaining to that region. So banks will effectively have 5 ISD numbers, one for as a central head office, then one for west, one for east, one for south, one for north, and maybe if they have a central division, one for central. 5 to 6 ISD numbers banks would have to take. Similarly, you need to evaluate your business. Next slide. Yeah. Valuation, I have already just now covered relating to the cross charge. Distribution to be basis the turnover. It may be possible that you are distributing the expenses basis a different cost driver, basis the number of employees or the number of licenses. But as far as ISD is concerned, the distribution has to be only basis the turnover and nothing else. Even ineligible credits are required to be distributed. Hence, it becomes very important that when you distribute anything, while you distribute under a single invoice, but the breakup of that amount needs to be clearly maintained. Because tomorrow, if the government is going to do the audit, they are going to ask that under this ISD number, whatever you have distributed, what is the breakup? And if that breakup also involves some ineligible expenses, then you would have to reverse the input tax credit in the recipient location. Hence, whatever invoice that we are raising in ISD, we should have an invoice level breakup of that at the back end. Whether e-invoice is required to be generated for the ISD bill, answer is no. Whether separate GST number is required for ISD, yes. Whether if my current jurisdiction is with the state government, whether ISD jurisdiction can go with the central government, possibly yes. There is nothing like, if your main jurisdiction is in central, ISD will also come in central, nothing like that. It can go anywhere. Whether ISD will be subjected to departmental audit, departmental investigation, assessment, scrutiny, yes. Even ISD registration can undergo audit. What happens to 180 days reversal? If I don't make a payment to supplier, do I need to do 180 days reversal in ISD? Answer is no. There is no requirement to do reversal in the ISD number because ISD number is only for distribution. You can still take the credit in ISD, but when you distribute, that registration will have to reverse because it has not been paid under 180 days. Hence, the restriction of 180 days reversal is not in your ISD number, but in the subsequent distribution that restriction comes. And same is the rule 42, rule 43, that is, if you have both taxable and exempt business, and the proportionate reversal of ITC also will not come in the main ISD number, it will go in the subsequent number. Next very big anomaly, rather I would say, is if somebody is having SEZ, because SEZ ideally is a zero rated supply and they don't have much of input tax credits. But currently in the GST law, they did not give any such benefit. So even if there is one of the GST number is SEZ, the distribution is mandatory, which means there is unnecessary accumulation of input tax credit in the SEZ and you need to file an application for refund. I hope government would clarify on that. Late filing of ISD, there is a late fee which is applicable. And very important is that you need to have your POs or agreements with the customers amended as to once this ISD is in place, as to which location exactly you want them to bill with which GST number, the addresses and all those requires change. Next slide. These are the steps that are required to be followed to file the ISD return. There is separate return, so there is an additional burden or the additional compliance. GSTR 6 is required to be filed to distribute the credit, and all the reconciliations are to be carried out in GSTR 6A, just like how there is GSTR 2A. The reconcile thing has to be carried out in GSTR 6A. So one more reconciliation. Next slide. These are all the various steps that are required to be followed. When you distribute the credit, you need to clearly tag distribute as eligible, distribute as ineligible. So let us say out of 100 rupees, 20 rupees is ineligible. You need to clearly put in the box so that only 80 will go as eligible, 20 will go as ineligible. Next slide. So this is the action plan. The point is, as far as the ISD compliance is concerned, firstly, you need to identify whether your ISD is applicable for your business. If yes, then a complete mapping of the business transactions on the revenue side to understand a transaction whether covers under ISD or under cross charge is required to be done. Second is a complete mapping of a transaction level expenditure side to understand what is common and what is not common. And within what is common, what is the attribution of that common is required to be done. And this activity once done, you are ready for ISD implementation. You need to take ISD number, start communicating your ISD number to your vendors. Make sure that your vendor bills only in the ISD number. And if it is not billed in that number, then there is a problem. Once this entire thing is done on a month-on-month basis, at a transaction level, this particular distribution is required to be carried out. So ISD as an exercise or a compliance, one is obviously adds to the burden. Other is we need to see how we can have effective systems and processes in place and how we can tag it at the time of passing of accounting entry, or rather at the time of creation of PO itself, so that the entire process flow is foolproof and robust and does not lead to any chance of errors. Any non-compliance, wrong distribution, incorrect distribution can lead to reversal of the input tax credit along with applicable interest and penalties. So that's the penalty of non-compliance. Government can initiate the recovery proceedings. So that is what about ISD. If somebody has got single GST number, they should not worry about ISD. But if you have multiple GST number, ISD is a devil waiting for you. So we can take questions on ISD. Mr. Damodar has raised hand. So Pooja, can you unmute him?
Yes, sir. Good evening.
Yes, Damodar sir, good evening.
Yeah, we are having around 6 GST registrations, okay, and having only one warehouse, but remaining all other offices having only just we are providing the services. That means we are not selling any goods from over there. We are just manpower services we are using for the 5 registrations. Only one registration we are making the turnover. Okay. In this case, how I distribute the input from other branches to the turnover related branch?
Okay. So, sir, you are having from the other branches where there is, only manpower, are you raising any bills to the customers?
No, we are not raising any bill. There is no turnover in the other branches. Zero turnover.
But all the other branches are registered under GST because you have a warehouse over there.
Correct, correct.
So there
Not
is
warehouse.
absolutely zero billing in that particular, absolutely zero billing.
Yes, absolutely zero billing. This is just what you say. Only salespeople will be there at all the branches. In this
And
case,
they are doing the coordination. Basically, they are to get the new customers and all
yes,
those things.
exactly.
They would be there. So if there are any local expenditures, you are doing cross charge to the HO, correct?
That's what my question. Whether I need to do cross charge, some rental expenses are there, common expenses which will be incurred by head office.
So this is a very, in fact, the similar question was asked to me by one of my other clients, where they say that the other location is absolutely minuscule. There is nothing over there. But and if I distribute my credit, then what do I do with that credit? Because the amount is going over there and getting blocked. So
Exactly.
I got your point, because if you distribute, then the credit is only going to get blocked, correct?
Exactly.
All right. So, sir, there are two things. Firstly, we need to evaluate in your business case whether the activities carried out by all the locations, because see, they are also an inherent function of the organization, and there is a marketing sales expenditure that you are incurring. So whether there is a coordination, communication, interaction happening to generate this, lead or the sale, and whether a cross charge is required. And if you're not doing cross charge, then possibly we need to see whether a cross charge is required. And if you do the cross charge, then to that extent, the turnover gets built, and whatever you distribute through ISD can be utilized and build back ultimately the entire ITC comes back in HO, and there is no working capital blockage. On the other hand, let us say the opinion comes out that there is no cross charge required at all. In that case, I think we can take a view that ISD registration is not required, because it is nothing common for organization as a whole. Like that, a view can be taken, and I would say we need to go by more of spirit of the law rather than the simple legal text. So basis spirit of the law, this particular view can be taken. Having said that, sir, my suggestion would be maybe we can have one discussion separately on this so that this issue is resolved.
Okay. Yeah.
Yes. Any other questions?
So there is one question in the chat box. Valuation
Okay.
for cross charge. What's the suggested mechanism?
Pooja, I think it's covered. He
Yeah.
spoke.
So valuation for cross charge is open market value as per the law. We need to arrive at a fair valuation, case to case basis. Yes, Yadnesh, you can just unmute yourself. Can we unmute Yadnesh?
So Yadnesha, you can just unmute yourself and speak.
सर अगर ये IMS जो है ये रियल टाइम पे अपडेट होता है, मतलब ई इनवॉइस किया सामने वाले ने तो मेरा IMS अपडेट होगा, करेक्ट?
यस।
अगर सामने वाले ने GSTR1 नहीं फाइल किया तो इसका मैकेनिज्म कैसे होगा आगे?
आपका IMS अपडेट हो गया, लेकिन सामने वाले ने GSTR1 फाइल नहीं किया, तो आपने जैसे एक्शन लेते हो, सामने वाला GSTR1 फाइल नहीं करेगा तो आपके GSTR2B में नहीं आएगा। बिकॉज उसको GSTR 1 फाइल करना जरूरी है आपके GSTR 2B में आने के लिए, करेक्ट ना नंदिनी?
सेम मैकेनिज्म एज ऑफ नाउ 2B में भी नहीं आता है, इन फ्यूचर IMS में दिखा, लेकिन उसने R1 फाइल नहीं किया तो IMS को डिसअपियर हो जाएगा और 2B में भी चला जाएगा।
2B में नहीं आएगा आपके।
हाँ, 2B से
लेकिन
चला
अगर
जाएगा।
हमने
क्रेडिट, यस,
हमने अगर उससे पहले एक्सेप्ट किया, IMS में जैसे दिखा मैंने एक्सेप्ट किया, तो फिर भी मेरे 2B में नहीं आएगा।
2B में नहीं आएगा आपके, 2B
नहीं।
में नहीं आएगा बिकॉज उसने GSTR 1 फाइल नहीं किया है। तो उसको
Okay.
उसको GSTR 1 फाइल करना जरूरी है आपके 2B में क्रेडिट रिफ्लेक्ट करने के लिए।
उससे
लेकिन
पहले
सर
जो
हम
भी
इसका
एक्शंस
कंट्रोल
लेते
कैसे
हैं,
रख सकते हैं?
उससे पहले जो भी एक्शंस लेते हो ना वो टेम्पररी रहेगा बस।
उसके पहले हम जो भी एक्शंस लेते हैं ना मैम, दैट इज ओनली टेम्पररी इन द सेंस एक प्री कम्युनिकेशन देने के लिए, बट अल्टीमेट 2B में तो तभी आएगा जब वो GSTR 1 फाइल होगा।
ओके ओके सर।
All right, I think there are no further questions. So, in case you still have any questions, you can get in touch base with the respective person in charge who is assigned in HNA for your day-to-day queries, or you can send an email to Nandini or me, and or you can schedule a call, and we can have a detailed discussion on the soft and smooth implementation of ISD and IMS in your business. So thank you all for joining and taking your time out. And we hope it was properly explained and you could understand the things. And I'm sure this could only be an introductory, and whatever questions you have, we will answer as and when it comes in future. So thank you, everyone. We'll close the discussion now. Thank you.
Thank you, sir. Thank you all.
Yeah. Thanks, Nandini. Thanks, Pooja. And thanks, everyone.
Thank you, everyone.